So I'm calling this one, what do I look for when I look for stocks? So as a, if you're a beginner, you're probably, looking at stock investing for various reasons, but you don't know what to look for and what to invest in and, how to read the charts, all that. So from my point of view, I'm just going to show you, how I look at stocks. And so as an example, we have Apple here. And so Apple is obviously one of the most valuable stocks in the stock market. And so some of the things you could look for is, if your entry point, you look at the 52-week range. So you see that within the last year, basically, that's what 52 weeks is, about a year, is went from 143.90 to 199.62. So you kind of see some of the volatility that's happened in the market. Another thing that I pay close attention to is the earnings per share in relation to the dividend. So you can see that the earnings per share, TTM means trailing 12 months. For the last 12 months, based on this point in time, it's been $6.42 per share. But they have a dividend payout of 96 cents per share. So it gives you a rough estimate that they can afford to pay the dividend and still have money left over to invest in, other things and have cash on hand for, acquisitions, things like that. So that's a good sign. That's something you want to see. So another thing I look at is this graph. So this graph here in red, I like to look at least 5 years, and I want to see what the trends are. For me, up and to the right overall is a good sign. So you always know that there's steady growth, just steadily growing in value. You could also look at the 1 year to see like some of the volatility that's happened in the last year. You can look at the year to date. So from this point to we're in February in 2024. So, month and a half, so to speak. And you can see the volatility there. So this, if you're a day trader, this might be important to you. If you're a long-term investor, you're probably more like 1 year and 5 year. And also you could just look at the max, right? So max is when they first became public, and that will show you from then to now. So December 1st, 1984, all the way to today. So it's taking into consideration the actual price, with stock splits, things like that. So you can see that there's been a really big, from the point of 2008 till now, you've seen a big rise. Before that, obviously they're in their infancy. Well, not infancy, but, they're still figuring things out as a business. So you can see that. So another thing that I pay close attention to is dividends. So I want to see the dividend history. Sometimes it's important, sometimes it's not, but I want to see if they're growing. So, and Yahoo Finance is a great tool, because anyone can go to Yahoo Finance. So it's a good way to kind of start off. And then, within any brokerage you're going to use, they will also have their own. So I like to go to historical data, and then you can change what to show. So from here, I want to show dividends only. I want to change the frequency to monthly. Typically dividends are paid quarterly. Some do pay monthly, but most are paid in a quarterly quarterly fashion. So since there's no quarterly option, monthly seems to be the best option. So I'll switch it to that. And then the time period, I want to see everything. So for me, I want to see it all the way back to as far as you can see, so I can see just steady growth. So I'm put it to max, and then I'm going to hit apply. And then from here, you can see all the payouts. So these are happening, looks like it's quarterly. So November to February, August, May, and you can see that there's kind of been, a rise up. So we're going, from the top down, but you can see if that's in reverse, you're actually seeing that they've raised the dividend over time. So that's a good thing because there's a concept called yield on cost. So let me go back to the summary. So there's a concept called yield on cost. So this yield that you see here of 0.5% is relative to the price that it is right now. But for someone who bought the stock, say 5 years ago, the share of this stock would have been, say we're in 2024, so just say February 1st, 5 years ago. So 5 years ago is 47.49. So their yield on cost is much higher. So because they've owned the share of stock so long that the dividend that they're receiving percentage wise is much higher. So your rate of return, your dividend payout is, has grown substantially from that point that you purchased it till now. So dividend growth in that respect is a very good thing for you. So yeah, that's very the high level basics of what I look for, and you can do this for any stock and just give yourself a high level look at what it is, what's the health of a stock. So let's look at something else. So let's look at GameStop. There was a big hype around GameStop in the past. So let's look at GameStop and the health. So the reason why I am pulling up GameStop is because I want people to understand that market hype doesn't change the financial picture of a company. The market is very emotional, and so people can get in the market thinking to make some quick money in and out, and sometimes you truly can do that if you know what you're doing, but those who don't usually are the ones not really aware of that and how that can be done. And so they're getting in and losing money because they're doing it at the wrong times. So something you have to be mindful of is the financials of a company. So you have to know what is their financial health. Just like if you, as a person, if you look at your personal balance sheet, how much money do you make every year? How many debts do you have? So how much net money do you actually keep in your pocket that you can use to invest or, buy things? So a company is just the same as an individual. You want to know how much money do they make? Do they have money left over? And so these are the things you have to look at. So this is the income statement. So Yahoo gives you very basic information for the income statement, balance sheet, and the cash flow statement. So income statement shows you how much they made in a given period of time. Some companies are annual filers, some do a fiscal year. So you have that. So you could see that their revenue less their cost, their gross profit is here. Then they have these other line items. I won't get into them specifically. Their pre-tax income is negative, and so their net income, again, also negative. And so this is not a healthy company. They don't have a profit, and so that their basic earnings per share is negative $1.03. So compare that to what we just saw with Apple, which has a positive $6 and I believe it was 43 cents, was a stark contrast to what this company is. So if you're a person who's thinking logically, you do not want to invest in GameStop. You lose money. There's no opportunity to make any money. If you go back to the summary, and you'll see that earnings per share, right here, you'll see it just a negative figure. It's not good. So you don't want to be investing in something like this. Now, if you're a day trader, this 52-week range, depending on where you get in and out, you might want to play that short-term game, but it's very risky. You have to watch it all the time. You really don't have a basis of why they would make any money. If they're a failing business, you cannot bet that they're going to be doing something to increase their value. And so in that regard, you don't really want to be invested in it. So let's just curiously see what they've been doing for the last year. So 1 year, yeah, it doesn't look good. Too much volatility, that's a hard word for me. Too much volatility and no real up and to the right. But 1 year isn't really, um, a good indicator. I like to do 5, so I'm gonna put it at 5 years, and you can see there's nothing up and to the right, and that's, to me, always, this is the first thing I look for. When I see 5 years and I don't see up and to the right, to me, that's a bad sign right off the bat. There's no steady growth over, what I would consider a long-term hold. 1 years, 5 years is considered long-term investing, right? Anything less is considered short-term. And so I don't think about short-term investing. I only think about long-term investing, and that's not good. So for me, that's a no-go. So I hope this is helpful. I'm gonna end it here. I'll try to do more of these, maybe talk about specific stocks, specific ETFs, and REITs and things like that. And if you like it, hit me up.